How to trade triple bottom pattern. This is what we are going to discuss today in the episode 7 of Simplified Trading Strategies from Market Secrets. So far, we have seen 6 different trading patterns and I hope you have liked it and understood better. This week, let us learn about a bearish chart reversal pattern, which is triple bottom pattern. When it comes to triple bottom pattern, there are 4 major parts which forms this pattern. The first valley, the second valley, the third valley and the trend line. Let's discuss about this in detail with an example. Here is an example of triple bottom setup. If you look at here, this is your first valley, this is your second valley and this is your third valley. And this horizontal line is your trend line. So let's start with the first valley. First valley is nothing but a simple V or U-shaped formation. Consider market is in a downtrend and market does a pullback during the downtrend. This forms a U or a V-shaped valley. At this point, there is no way to tell if the market will reverse because a pullback occurs regularly in a trending market. Now comes the second valley. This is another simple U or V-shaped pattern in the chart. Price tries to go down again, but it gets rejected at the same area once again. At this point, market makes a pullback and forms a consolidation. This is a first sign that the market could reverse higher. This forms the second U or V shape. Now comes the third valley. This is yet another V or U-shaped formation. Again, the market attempts to break out lower and fails once again. The price gets rejected at the same area once again. This forms the third V or U shape. Now 3 spikes are visible after 3 failed attempts to break out. And now comes the trend line. This is the last line of defense. If the price breaks out above it, the market could reverse and could head higher, and that would mark the beginning of an uptrend. Once you identify a triple bottom formation, just draw a straight line on the top which connects the swing high of the valleys. So these are your valleys and these are your swing highs. So you should draw a straight line or a trend line connecting the swing high of these valleys. We will get a technical breakout when price gives a breakout above the line drawn. There are few things that you need to remember while trading the triple bottom pattern. If you spot a triple bottom pattern in a strong downtrend, chances are market will continue dropping lower. So the last thing you want to do is go long just because you spotted a triple bottom pattern in the chart. This is the biggest mistake traders make when trading the triple bottom pattern. Also, the space between the first, second and third valleys should not be too close. So make sure they are evenly spaced. And there is one most important factor here. How do you know when the breakout is going to be false so that you can avoid becoming one of the trapped traders? First, if you see a strong powered move into the trend line followed by a bearish price rejection, then there is a good chance that the market might reverse from here. If you look at here, there is no strong powered move into the trend line. But in case if there is a strong powered move into this trend line, then you need to look for bearish price rejection. What is a bearish price rejection? It is a simple candlestick pattern. Please refer the first few episodes of our price action trading series. So if you see a strong powered move into the trend line and if you see a bearish price rejection near the trend line, then this pattern becomes invalid. So you should avoid taking long here. And secondly, have a look at the higher time frame. If the higher time frame is in a downtrend, then the chances are the triple bottom pattern will fail and the price will continue dropping lower since the higher time frame is in a downtrend. So these are the things that you need to keep in mind to avoid getting trapped while trading the triple bottom setup. And when it comes to volume, as I always say, the volume is the most important thing you need to check while trading in any pattern. So a perfect triple bottom pattern will give a double confirmation when the price gives a breakout to the upside with a spike in the volume. And when it comes to entry, you can enter into the trade once the price gives a breakout above the trend line. But there are two things that you need to remember here. Never enter before you see a huge volume. It will be an early entry and you might get stopped out. Also, never chase the price. If price had given a breakout and if it has moved too far, don't try to enter at random places. You can wait for the pullback. Don't enter it too late. So this is for a typical entry. If you are a new trader and if you are afraid of false breakouts, then you can enter the trade during the pullback. So once the price breaks out, it might either get pulled back to the trend line or it might form a flag pattern during the pullback. You can use either of these two options to enter the trade. And if you are an experienced trader, you can enter the trade once 50% of third valley is formed and if you spot a candlestick reversal pattern. Like I mentioned earlier, refer the first few episodes of our price action trading series to know more about candlestick reversal patterns. But this type of early entry is almost similar to the horizontal channels that we discussed in the last episode. The target for this pattern is arrived by measuring the height of the valley from the trend line. So if the height of the valley is 100 points, then the technical target is 100 points from the breakout line or the trend line. And when it comes to the stop loss, once the price gives an upside breakout above the trend line point becomes your immediate support and you can keep the low of the valley as your stop loss. But if there is a build-up or a consolidation near the trend line, that can be used as a stop loss directly. Also, if you are taking an early entry near the valley 3 or you are taking a late entry during the pullback, you need to adjust your targets and stop loss accordingly. So this is how you should be trading the triple bottom pattern. And as always, don't try to trade the pattern blindly. Try to understand the price action behind these patterns. If you have any queries on trading the triple bottom pattern, let us know in the comment section. We'll be happy to answer it. Hit the like button if you've liked this video and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.